welcome to A Crystal Ball. My guest today is Mahesh Nandurkar of CLSA. Mahesh, very good to talk to you. And we talk on an important day when the news from Pakistan is that they're saying that both India and Pakistan want to cool down tempers and to try and ensure that there is no major escalation in the violence from here. We did see a knee-jerk reaction on Friday because of this news. Do you think the market can put it behind this event, behind it and move on? Do you think the market should not get unduly perturbed by what happened last week?
Hi, good morning, UDYAAN. Yeah, I definitely feel that this geopolitical event that you're talking about, had a much more pronounced impact on Indian media and Indian investors. But this piece of news was not that prominent in news if you look at the global setup. I feel that most of the global investors, international investors, view this event mostly as not that alarming a thing, at least at this point in time. And that's the reason why I feel, and also based on what we have heard in the media and what our talks with some of the different experts has been, seems to indicate that this particular issue is unlikely to escalate significantly from the current levels. And from what you're telling me, it looks like we are getting some sort of a confirmation from the military officials as well. So yes, I will feel that the market will probably look beyond this event, at least at this point in time.
What's the sense you're getting when you speak to some of the funds that you deal with every day? I mean, because the fear is that whatever happens from a geopolitical point of view or in terms of an economic impact, it can run the risk of temporarily choking off the liquidity pipeline. Do you have any such fears that in the near term it could lead to some temporary underperformance of India versus other markets because of this lingering fear? Or do you think funds are mature enough to understand that this does not necessarily affect India's prospects?
No, as I said, as things stand today, I don't think the foreign investors are really alarmed at the situation. We'll obviously have to keep on monitoring the developments at the border, and probably the next couple of weeks could be crucial. But my sense is that the international investment community is not really too perturbed with what we have seen today, or over the last 1 week.
What is the general liquidity backdrop looking like to you now, Mahesh? Because it's been very benign for the last many months. Last week there were a few jitters because of this whole Deutsche Bank episode. Do you see any major risks in the horizon to the momentum of inflows slowing down in the near term, in the last quarter of this calendar year?
So obviously the big global event that will be happening in the fourth quarter of this calendar year is the US elections. And so I think that is going to be one big event, and what kind of policies the new president of the US talks about. Now what we clearly understand is that both the presidential candidates currently seem to be talking about deficit financing, maybe of different different quantities, but some element of deficit financing definitely, which is actually going to be a good news for the US economic growth. And there are some tax concessions being talked about by one of the presidential candidates. So all that is good. What we also need to keep an eye on is what kind of monetary policy preferences the next president has. And there are some media reports which seem to indicate that Mr. Trump is not particularly keen to continue with the low interest rate environment. I mean, there are only some media reports, not the broad-based media reports. But I see that as the potential risk because, let's face it, a lot of the market performance in India that we've seen over the last 12 months, 6 months, etc., is more because of the global liquidity factors. And as you rightly said, we have been in a very, very benign environment for a long period of time. Now, anything that will harm that expectation, would definitely be negative for global markets and also for the Indian markets. So I would be looking out, for that as a possibility. But I think notwithstanding that, I would say that we should be assuming the easier liquidity environment to continue, and we should be constructive on the markets.
So you don't think a 10% kind of correction is likely in the last quarter of this year because of the reasons that you mentioned, unless there is a surprise in the US election verdict?
Yeah, so the thing is, as of now, Hillary Clinton seems to be having still some sort of an edge, over Trump. Our global strategist view is still that, it is likely to go, as far as the current polls are concerned, on the expected lines. But yes, if we get some, some knee-jerk reaction, on the back of expectations of the low interest rate environment in the U.S. to be discontinued or not to be discontinued, but maybe it doesn't remain as benign, then I think we see a probability, of market correction. But as I said, I think that's not the base case at this point in time.
Time for a break. On Crystal Ball, we'll return with Mahesh Nandurkar of CLSA in just a minute.